The Bitcoin skirmish that Musk got into recently, I think, is a good indication for who he is, how he thinks, and what it means to be invested in his companies. Therefore, we take it seriously. As far as Bitcoin is concerned, we think we share some of the thoughts. We have some advice or some of our thoughts. We want to share some of our thoughts in terms of how we think that the Bitcoin and generally the crypto community can improve as far as the energy footprint is concerned. And finally, also, we want to talk a little bit about general investing and the idea to follow profits versus doing your own homework. This is another In Wrong podcast. It's May 18th, 2021. This is Krim Delco. Since the last update on May 14th, we are up 70 basis points. The market is down 30 basis points. For the year, we are down roughly 18.2%. The market is up 9.5%. We're underperforming by about 28%. Our underperformance is still driven primarily by Tesla and also by the CRISPR stocks. We have spoken about this in the past. I think the dynamics are unfortunately right now that there is an attack on the ARK Invest ETFs. There are short positions initiated in Tesla and other stocks, and that we will have to go through this period until fundamental news from Tesla or the biotech stocks start driving those stocks back in the right direction, and then the shorts will be squeezed out, and we will have we will reach new highs. So until that happens, basically in a nutshell, what we're saying is right now the market dynamics and the market technicals and all the chart people and all these people are in control until the companies come back with real fundamental data, with real business insights, business reasons for the stocks to change their current levels into whole new spheres. Until that happens, we will have to probably live with this underperformance. Hopefully, this will change in the summer. At least, hopefully, not that long, but by the summer, we should have a more clarity. We should have the Q2 results. We should have on the biotech side some more FDA studies and things along those lines. Some breakthroughs on the SynBio side. Some scientific breakthroughs that could drive stocks into new spheres. If not, then we could also have M&A on the other side. So we have a lot of vectors on our side. What's going against us is pure market dynamics, technicals, traditional hedge fund managers, traditional Wall Street types who are now sort of doing the sorcerer's apprentice thing and just playing around with those stocks, shorting them, putting news out. Like yesterday, for example, one of those shorts came out with a 13F, and the news was, oh, he has a $500 million short position in Tesla, when in fact all he has is, or he owns puts with an underlying value of $500,000. We don't know how much, $500 million. We don't know how much actual money he put in those puts. It could be a couple $100,000 that could give you this much exposure. The dynamics of the option markets allow for this type of misinformation, and the media just jumps on it and drives the stock. The stock was down 4%, the market, ended down 2% based on basically non-news. So it just shows how misleading the markets are right now, or basically there's no fundamental floor in the market. There's no driving vector in the markets. It's what I call the sorcerer's apprentice, the visits of Wall Street driving the stocks up and down, and that's normal. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. So sometimes that happens. Sometimes people like, let's say I listen to Hugh Henry's podcast, and he's a typical old school fund manager who looks at charts, who looks at stocks and thinks he can make money that way. And that's great. And these are the kinds of times where people like that actually have a chance to make money, because their skills of reading charts and trying to anticipate market behavior, they're in demand. And then sometimes it is our side of the coin, which is the fundamental innovation, the disruption side of things, when it starts kicking in, and then all these charts and all that stuff starts becoming irrelevant. So now let's get to our topic of today. I want to talk about the Bitcoin intermezzo or skirmish or whatever you want to call it that Elon Musk was exposed to recently, and then we want to talk about that first and interpret that, and then also talk a little bit about Bitcoin. So Elon Musk basically tweeted a few days ago that Tesla will stop accepting Bitcoin as payment because of the energy footprint that Tesla is not happy with. Now, Bitcoin is, like we said previously on this podcast, Bitcoin is a very orthodox religious community. I think it has to be like that in order for something like that to even succeed. We compared Bitcoin with Jesus and the Christian sects during the Roman Empire. You have to be a fanatic, you have to be extreme to even have a chance to overturn a world order. And what Bitcoin is trying to do is overturn the world order of centralized finance into some sort of decentralized finance. There's lots of shortcomings. One of them is the centralized hash rate situation. The energy footprint is a negative, and there's also some other negatives, but those are the main two negatives. So the main hash rate comes out of China, and it's mainly driven by dirty coal and things like that in China. So this is what Musk kind of said in his tweet. He said, "Oh, we don't want this anymore. This is not good. Bitcoin has to change, and we will be happy to accept Bitcoin again when that changes." Now, first and foremost, I think this is right, and the Bitcoin community, although very aggressively attacking Musk, has also admitted, at least if you listen, let's say, to NLW, which is sort of the PR of Bitcoin, if you want. So yeah, I mean, he said the same thing after attacking Musk left and right. He should shut up, and he's a billionaire who should shut up. He admitted, well, in fact, why don't we just try to make Bitcoin cleaner? So the solution to all this mess is to make Bitcoin cleaner, because there is a case to be made. Bitcoin could become a catalyst for the renewable energy business globally. Imagine if you really had all of a sudden hydro plants and solar plants and all this so-called stranded energy assets which could be used to mine Bitcoin. This would be amazing. The problem is it's probably happening a little bit. We had a few years ago somebody asked us if we would like to invest with them in Paraguay into hydropower Bitcoin mining assets. So these things are probably being discussed, but they're not being discussed and they're not happening fast enough. And to some extent, this is because of China. Now, let me talk about China. In general, here is the Chinese economy. When I talk about the Chinese economy, let's talk about two sides of the coin. One side of the coin is what we see now more and more, which is the Tencents and the TikToks and the Alibabas and all that stuff. And this is what China has created, to their credit, in the last 20 years, which is a real competitor to Silicon Valley. This is not the economy we're talking about here. There is an old Chinese economy, and this is the old. This goes back to Mao and the communists and all that. What that is you have these local municipalities. They usually have a utility and some sort of plant, either a steel plant, an aluminum plant, or something like that. And those things are still in place. They employ people, they put food on the table, they create GDP, they create power, they give local governors power. All that stuff is still in place. It's not gone away. And it's a huge internal struggle that the Chinese have to deal with internally, because you have a central power in Beijing, you have all these new entrepreneurs, you have a lot of people doing things that are, let's say, new, and then you have this old structure in the economy which is going against that. It's let's say dirty energy, dirty coal, dirty this, dirty that, and it's going against many things that the Chinese stand for. So there's an internal struggle, first and foremost, which I have not a lot of insight into, but I know there is a big struggle. So, for example, the fact that we have so much steel production, aluminum production, stainless steel production in China, it is not because the central government in Beijing wants that. It is because these local municipalities, sort of as an unintended consequence of decades of central planning and things like that, are just in a position right now where they can either stop producing and basically become unemployed and useless, or they keep producing with no profit, but at least they generate cash and jobs and things like that. So this is kind of the lay of the land in this other part of the economy that, let's call it the old China. And in this old China, we have a lot of spare capacity. We have spare capacity in cement, steel, aluminum, etc. Particularly aluminum is a problem. And aluminum ties to Bitcoin because aluminum was built on top of a stranded energy infrastructure. So for example, you have a village somewhere in the middle of China which has a river. That river provides electricity, and in order to bring the electricity from that little place to Shanghai, you would have huge losses, huge investments. So what they chose to do back then is build an aluminum plant. Makes a lot of sense. We were, for example, in Russia about 10 years ago, visiting a plant in Siberia, and that plant was next to a massive aluminum plant because there was the Yenisei River providing almost free electricity. So same thing in Russia, in China, in all these big countries with former central planning. There is this culture of having a lot of stranded energy, which was then turned into aluminum, steel, and things along those lines. Now, a lot of these plants are probably still operating and or not operating, it doesn't matter. What they're doing now is looking at the economics of, should I be producing aluminum at almost no gross margin, or should I be mining Bitcoin? The answer is the latter, because Bitcoin prices have gone up a lot. And here we go. This is exactly what happened in the last 6 to 12 months, because Bitcoin went from 10,000 to 60,000. All of a sudden, you had this massive, massive increase in dirty energy production in China going towards Bitcoin mining. This is, in a nutshell, what happened. So Tesla, on the one hand, yeah, should they have known that? Well, yes, they should have, but they also drove the price from 30,000 to 60,000 and created probably another, I don't know, let's say if you take a chart and you would say, in typical in the mining business, you always look at these cost curves, and you say, well, there is, let's say, 50% of all the production is going to be turned into, let's say, this industry if the price is X. And if the price keeps going up, you have 60%, 70%, 80% of the industry turning into this industry. And then when the price keeps going, let's say, in terms of Bitcoin, let's say when the price went from 40 to 60,000, all of a sudden 90% of all the dirty energy in China was transformed into mining operations, which is good for the steel price and aluminum price, because that energy was removed from the steel and aluminum markets towards Bitcoin, and therefore we have this increase of dirty energy. This is kind of, in a nutshell, what Elon Musk was saying in his tweet. I don't know what data he's using, but it's just an analytical process that to us, it makes a lot of sense. It also is supported by the fact that we have rising prices in a lot of these base metal industries, where people were saying, oh, it's COVID, it's coming, inflation here, inflation there. Well, partly yes, but it's also because a lot of capacity that was primarily used in China to produce all these base metals is now turned into Bitcoin production, and therefore there's less supply of these other materials, and here you go. My hunch is it's probably even the semiconductor supply chain is probably affected by that, because semiconductors at the base level are also very energy intensive, and a lot of them, the basic ones, are produced in Asia, and China, I'm sure, has a role to play there. And if you now move all this electricity production into Bitcoin, well, there we go. So to summarize, we believe that what Tesla is pointing out here is very, very important. It is much, much more important than just this bickering on Twitter against Elon Musk. It is actually a serious situation where you have this massive, massive energy pool in China that has been producing energy and then base metals and basic materials and chemicals and all that stuff for decades. And now you have this new asset, Bitcoin, which is using resources from that existing pool and converting it into Bitcoin mining production. And therefore, we have this inflationary situation around the world in base metals, which can then translate into inflationary purchasing prices and so on and so forth. So this is a much more serious macro issue than we would have thought in the beginning. So thinking through this process along those lines shows us how serious this is. And even though Musk is just talking about the environmental footprint, I think there's a much bigger issue here, which we should at least recognize. Now, to come back to the Bitcoin situation itself, I think what Musk is alluding to here is that, listen, guys, we need to find a way to get Bitcoin out of China and cleaner. And this is possible. It's doable. You can create businesses, you can create startups, etc. That, let's say, I'm just thinking, let's say you could have a massive solar plant in the desert of Nevada and use it for Bitcoin mining. You could do the same thing in the Atacama Desert in Chile. You could use hydropower in Norway. etc., etc. There is plenty of stranded assets around the world that can be used for Bitcoin mining. The problem is it's not happening, and partly because the Chinese are crowding out everybody. So what Musk is pointing out here is a serious problem that has a solution, and it is up to the Bitcoin community to find a way in the decentralized fashion that they operate to solve this problem. And it's going to be difficult, but I have a lot of optimism that it's going to work, because in the end, what Bitcoin is relying to, or what this decentralized cryptocurrency world is relying to, is the interplay of free markets and pricing. And so far, that is actually working pretty well. So we believe that there will be an incentive now for investment into renewable energies to mine Bitcoin. So that should take care of itself. I think we agree with Elon Musk. Long-term, decentralized cryptocurrencies are a fantastic idea, a wonderful idea, and we believe that that can be solved. We at Orange Capital Partners have a small investment in Ethereum and Algorand, partly because both of them are trying to get away from the proof of work, energy-intensive situation into a more efficient, scalable situation, in particular Algorand. So we have a view on crypto that is along the lines of Elon Musk, that is, it's a great idea. It just needs some better algorithmic solutions for some of the problems like scalability, speed, security, and etc. So to summarize, actually the last point, excuse me, that I wanted to point out here is, what does this Bitcoin episode tell us about Elon Musk? And it tells us two things. It tells us one thing, that he is really, really good at putting the finger on the pulse of things. Sometimes on the good side, sometimes on the bad side. He's created this whole ESG community. He's created an electric car industry. He's shown us the way, the way to space. And now he's showing us what's wrong with cryptocurrencies. And I believe that we as a society will make a collective decision to fix that problem. This is the first thing he's done. Second, he's also showing us that he is actually a very a typical sort of hedge fund type investor. He changed his mind. And people are upset. How can you change your mind? How dare you? Well, he did. And this is exactly how iterative entrepreneurs function. They try, they fail, they make a mistake, they fix, they go on. This is what I suggest Elon Musk should be doing, and he's doing it. So it shows us that he has the ability. He can be wrong, and it costs us 20% in the stock price sometimes. That's fine, it happens. It will, over the long term, be the right thing to do, because what Musk is doing over the long term is, like we always said, he iterates fast. He tries to lower the cost of iteration to the point where we have this ability to continuously, through iteration, start finding better solutions for new concepts and engineering practices, which fundamentally will have a large impact, which is exactly along the mission of our fund. And that's why we have our largest position in Tesla. Thank you.